have greater transparency and uniformity, a company has to ensure high quality corporate financial reporting, maintain records and reports expenses and revenues. We need a common accounting language that can be easily understood by shareholders and investors worldwide. To fill the gap, IFRS appear for standard reporting of financial statement. The companies are opting for and framing accounting standards in the parlance of IFRS. The organization's senior management must ensure that the prepared financial statement comply with the IFRS. Hi everyone, I am happy to see you again on our channel. This is Muskan Agrawal and today I am going to brief you about one of the important topics, that is challenges of IFRS implementation in India. So firstly we will learn about what is IFRS. IFRS stands for International Reporting Standards. Actually, IFRS is a collection of accounting guidelines for reporting financial statement of organization that are created to make reporting of financials statement uniform, transparent and simply to compare globally. Accounting Standard Boards frames and issues International Financial Reporting Standards. In 2001, the earlier International Accounting Standards were replaced by IFRS. Now, I am going to tell you about Ind AS, why I am explaining about Indian AS, where you will understand this if you watch the full video. So please watch the video until the end. Indian AS. So India AS stands for Indian Accounting Standards. Every company registered in India has to comply with the accounting standard for financial reporting. The convergence of IFRS with Indian accounting standard has brought a paradigm shift in the financial reporting and regulatory landscapes for firms, companies in India. Through many professional advocate for the enforcement of IFRS, countries face many challenges in implementing IFRS convergence with the Indian accounting standards. Will present certain challenges and problems such as lack of infrastructure, lack of experienced IFRS professionals, high shifting cost, modified rules and regulations, etc. In spite many benefits of IFRS, the challenges of IFRS implementing in India are reported. So now we are going to focus on key challenges of IFRS implementation. First challenge is taxation. The implementation of IFRS will change the structure and methods for preparing financial statements and are bound to change the tax liabilities. In India, there is no change in Indian tax laws with respect to the implementation of IFRS, as the tax authority uses tax accounting standard for the purpose of taxation. Although enough changes are made to recognize the IFRS coverage Indian accounting standard, a complete change in the tax structure will pose serious challenge for Indian authorities. Second is fair value measurement. IFRS considers the fair value measurement for valuing the particulars in the financial statement. Indian companies have long been preparing financial statement per the Indian GAAP, generally accepted accounting principles. The use of a fair value system of measurement would bring subjectively and volatility to financial statements. Valuation professionals are to be hired to measure fair value, increasing the cost of financial reporting. Now, next challenge is IT infrastructure. A complete overhaul of financial accounting tools and software used for financial reporting would result in substantial allocation of investment in IT infrastructure for companies. Companies would be reluctant in changing the methods and financial reporting infrastructure as it involves more cost, time and efforts. This acts as constraint for small businesses and poses challenges for IFRS implementation. Next is regulatory challenges. This is a major challenge for implementing an IFRS in India. Indian accounting standards are major governed by various regulatories and provisions of Companies Act 1956, SEBI's Act 1992, Income Tax Act 1965, Foreign Exchange Management Act 1999 and Indian GAAP. Some existing laws like SEBI regulation, RBI regulation also provide guidelines for preparing and reporting financial statement. But under IFRS, there is no rule in overriding laws in financial reporting, and a professional has to follow complete international financial reporting standard in letter and spirit. The legislation mentioned above have been proved to the major hurdle in IFRS coverage Indian accounting standard. To mitigate the challenge of IFRS implementation in India, respective change are to be brought to exist law in line with IFRS. Awareness and training small and medium scale business is also a key challenge that create a hurdle for implementation of IFRS in India. So these are the challenges that are faced at the time of implementing the IFRS in India. RBI and IRDI are responsible for implementing the IFRS-converged Indian accounting standards. In a nutshell, the benefits of IFRS outweigh the challenges with advantage like timely financial information for decision making, better comparison of financial statement, better access to the capital market, and consistent and transparent reporting. IFRS compliances will undoubtedly increase the credibility of Indian business globally and their access the international financial market to raise the capital. So this is all about today's topic, challenges of IFRS implementation in India. So for more such informative videos, please click the subscribe button for daily notification and also hit the like button and comment below. Thank you so much guys for watching us, and I will come back again with another informative video.